Awesome. So, welcome to another Lunch and Learn. All my favorite realtors, those that are here live, those that will on our social media. This is my close friend and partner, Todd Stern. Todd
Hello.
is with Nationwide Credit Services and has educated me on credit scoring, credit models, and what it means to be able to do credit repair. So I probably owe my last at least two cars to Todd because that's how
Well,
much
thank
money
you.
he's made me in fixing credit, getting them to qualify. Sometimes it's a 2 month process. Sometimes it's been a year process. He's helped my family. He's helped many clients, and he's just the expert that I know and trust. And he knows more about. He's forgot more about credit than I'll ever know. So once again, I'm Chad Lubben. I'm with Summit Funding. I am a mortgage lender in the Chicago, Illinois market, as well as the Charlotte, North Carolina market. So we'll have realtors on from all across the country and that tune in. So what I wanted to talk to you today is how to understand and manage your credit profile. Here's why this is so important. We would be foolish to think 40 million Americans are unemployed and that credit isn't going to constrict. It will continue to restrict. We've seen more lending changes in the last 3 months than we've seen in the last 10 years. So as this continues to evolve and the economy continues to change, it's our job as real estate professionals to educate our clients on what's available. I'm shocked at how many clients get in front of me thinking they don't have enough credit to buy a home or good enough credit. And it's like, dude, you're like a 700 score. It's fine. Relax. And I'm shocked sometimes at people that think they have good credit. And I'm like, it's not even in the ballpark, right? So there is just a lot of different reasons for that. And Todd and I will dispel some of those myths today. So first and foremost, I always want to listen, when I go and hear a presenter, it's like, why am I going to listen to them? When I read an author's book, that's cool. They wrote the book. Why are they an expert? So I don't tell this stuff to brag or impress you. I tell it to impress upon you that I've had success, and this is some of the success, and these are why I'm able to speak about some of these things. Number one, we've wrote over 3,700 mortgages in my career. So I've just worked with a lot of different people, and I've went through every situation possible. Our income's been $1 million the last 5 years in a row. I've went from negative $70,000 in IRS and credit card debt 10 years ago to that number should be actually updated. There's over 3.3 million I have in the stock market now. I've been a top 1% mortgage lender since 2013, in the top 200 since 2014, and one of the top 25 in our coaching program, the core training. I'm now a coach in it, former financial advisor, and I have a finance degree. So that's my little brag slide of why you should listen to me. I will tell you, you can listen to Todd because I know a lot about credit. He knows more, and I've trusted Todd for almost 10 years, and there's no one else that I use. I used to have three. Todd won me over. He's the only one I send credit repair to. So Todd, tell
Thank
them a
you.
little bit about yourself. Why should our listeners listen to you today?
Excellent. Thank you, Chad, for having me today. So again, my name is Todd Stern. I'm the owner and founder of Nationwide Credit Clearing, located in Chicago. I've been doing this for 30 plus years. We are the largest credit repair company in Chicago, the most Google reviews, the best Google reviews. We follow all the compliance issues with the state and the government. We do not take upfront fees. It's a month-to-month program. We also do soft pulls on credit reports to look at people's credit before we even start. But a little bit about me. Bottom line, we do a good job. If they're not the right company, the right client for us, we tell them what to do and then come back to us.
Cool. So I'll give you just like a quick credit 101. Todd and I actually did a little podcast on this yesterday. But before I get started on some things that I think are going to be trends in the market over the next few years, Todd, talk a little bit about what makes up a credit score and why certain people have the scores that they do.
Sure. So credit scores are based on a couple, situations. Number one, obviously you want to have good open credit with balances below 30%. So as long as you do that, you're going to have a decent credit score. Plus age of credit. The older the credit is, that's definitely going to help as well. What lowers the score? Balances over 30% will definitely lower your score. Derogatory information such as collections, late payments, charge-offs, judgments, bankruptcies, any of that type of negative information will lower your score.
When he says balances, that is credit utilization, it's called. It's, hey, a credit card extended a $10,000 credit limit. I need to be under a $3,000 balance on that card, right? And when do those balances get recorded with the credit repositories, Todd?
So those get reported. Every bank is going to be different, but it's anywhere from 30 to 60 days. So just because we'll talk to a lot of people, and when we review the report, we go over the good credit as well. Mr. Smith, your Citibank says you owe $1,000 with a credit limit of $1,500. Oh, I just paid that, yesterday. But again, it could take 30 to 60 days to update to the credit bureau. So if you are going for a mortgage, plan ahead. Make sure that these payments are done so then when Chad does pull that credit report, those balances will reflect the lower amount.
Hallelujah. Thank you. I will say one thing, like there are so many people that get to me and they're like already under contract or they're already out shopping for a home. I'm like, dude, if you would have got to me 90 days ago, this would be a way better situation, right? So I think the optimal time to get in front of the mortgage lender before they go out and look at properties is 90 to 180 days. If I could talk to every client 6 months before they bought, I would be able to turn them over to Todd if they needed to clean up some stuff. I would need to consult them on where their credit balances versus their credit limits are. I would be able to optimize them in the best situation to purchase a home. Unfortunately, we all know that we are in this instant gratification society where we see something on pop up on Hot Properties or whatever the hot website is, and they got to go out and look at the home and buy it right then, right? So if I could give an ideal scenario, I'm talking to them 6 months before. So please, realtors, don't ever think it's too early to send them to your preferred mortgage lender. The sooner, the better. And Todd, talk a little bit about why sometimes the credit repositories have different scores. Like, why does TransUnion different than Equifax and Experian? And why is it important for us to know all three of them?
Sure. First, I want to just touch base a little bit on your comments. I agree with you 100%. A person that is going to buy a house, as a realtor, first thing you should do is obviously go to Chad. Make sure that they're qualified because I see it all the time. I get calls from mortgage brokers. Oh, one of my good realtors sent me this client. He wants to close in 45 days, but his credit's a train wreck. So those are difficult. The more time we have, the better off you are. So always, first thing before you take a client out, for two reasons, credit and qualification of, this guy might say he can buy a house at $700,000. Chad does the numbers and he can only buy a house worth $500,000. So that's really important to get the people to Chad first. So I just wanted to touch base on that. And as far as the three, yeah, exactly. As far as the three credit bureaus, there's TransUnion, Experian, and Equifax. And there's also, I'm sure you've seen, Chad, so LexisNexis. People say, who is LexisNexis? So what LexisNexis is doing now is they're actually reporting the judgments to the bureaus because I think the bureaus don't want to get involved with that because of legal issues. We do have an attorney that when there's problems with credit, for instance, if Chad had something on his report that doesn't belong to him, a judgment or whatever, the attorney will sue them. So the bureaus want to get out of that public record business, and LexisNexis handles it. It even states it on the credit report, supplied by LexisNexis. So, but as far as scoring, let's talk about the three: TransUnion, Experian, and Equifax. Three different companies. Why isn't my score the exact same on everything? Because a couple reasons. It just will never be. Sometimes Experian will report an item that TransUnion doesn't. There's no law stating that you, the creditor, have to report to all three bureaus. So I do know some companies that only report to just one or two. For instance, in Chicago, years ago, People's Gas did report to TransUnion, but not the other two. So there's
Right.
all different reasons
Absolutely.
as far as your score. Yep.
Yeah, a lot of the utility companies, guys, will just report to one of the credit repositories, right? So if they have a late payment to their electric bill and they just report to Experian, I've seen Experian scores at 800 and then the next two scores at, you know, or I'll see them at 600 and then I'll see the other two scores at 700 or so, you know, some sort of combination that's just like huge variance, and that's why there's certain things that only report to certain repositories, right? And it's a lot of the time the local creditors, right?
Yep.
Like here in the Southeast, Equifax is very big, right? And that's just because it's based in Atlanta, right? So TransUnion's really big in Chicago because it's based in Chicago, right?
Yep.
So just some ideas and things to know of why credit scores vary so much. And Todd, we talked about this yesterday on the podcast, and I just thought it was so like I was blown away by how simple we spoke, but how much knowledge there was there on credit. Talk a little bit about the misconception of these online providers like Credit Karma and Discover Card and Chase. Why are those scores so much different than what we pull as a mortgage company?
Well, first of all, remember you get what you pay for. So again, the problem is if I pull Credit Karma or if I pull Chase Bank scores, I've never seen them match. And then I'll say, Chad, pull my credit, and that won't even match. So none of them are, there's different scoring models that they use. So for instance, Credit Karma uses a scoring model different than what Chad does. There's 8 or 9 different scoring models that they can use. Why Credit Karma doesn't use the same one Chad, I don't know. You can't call Credit Karma and say, hey, why is my score higher? But we have noticed that Credit Karma scores are usually higher than Chad's scores. I always tell people if Credit Karma says you're an 840, 850, you're probably pretty good because Chad's going to be, maybe an 820 on that. It varies. But if Credit Karma says that you're 600, there's going to be issues because most likely Chad's score will be lower than Credit Karma. Another type of scoring model is insurance, auto. When you go to get your car, if you finance it, those scores are really high. You're going to be in the high 800s if you're low 800 through a FICO score. Insurance scoring models, that's another one. I tell people all the time, credit's so important for even little things like that. You have bad credit and a low credit score, your insurance premium can be more than somebody that's got an 850 score. So again, there's so many things that credit scores have to do with, and that's why you need to maintain a high credit score to get the items that you want without paying a premium.
Absolutely. That's something you guys should all write down, like what your customer thinks their credit score is on Credit Karma. It is not going to be what I pull. And we are on a FICO-based scoring scale. Todd, what is your opinion on free items like Credit Karma? It's free. Annual credit report is fee. What is your opinion on if it's free?
If it's free, they're not horrible. Okay, let's say that. I've seen Credit Karma. I have Credit Karma and everything. It's not horrible because it does show you certain things, but you're getting what you pay for. I get a lot of times people will tell me, well, these items are on, and then I pull right from the bureaus, and the items aren't on there. So I just don't trust Credit Karma in that sense. The only thing I like to use it is for a barometer. Like if Credit Karma scores goes up, most likely Chad's score is going to go up as well. So that's, to me, about what it's good for.
Now, I've heard, and this is just something I've heard, I've never confirmed, and it's a great opportunity for me to ask you, when you have those online free services, I've heard that it's dated information, and I've noticed when I've looked at them, it doesn't seem to update as quickly as the $72 report that I pull.
Absolutely, because there's cost. This costs Credit Karma. People say, well, how in the world does Credit Karma make money? This makes no sense. They're giving me this for free. So again, where Chad is paying $72 or $74 for a report, he's getting up-to-date today's information. Credit Karma, they're like, well, we're giving it for free. We're not going to update this as frequently as Chad does. Now, Credit Karma, I'm going off the path a little bit, but Credit Karma they make offers to you. Hey, you're qualified for a Chase credit card or whatever. Click the link on it, brings you to them. That's how Credit Karma is going to make their money. So again, it's really a teaser on let's give them the credit information, but again, it's a little backdated. It's not as accurate as a FICO score that a credit report that Chad does pull because he pays for it.
Yeah, absolutely. The most accurate I've seen online, guys, is myfico.com. So if you have like landlords and you're doing a lease for one of your landlords and you need a cheaper report that's fairly accurate, I wouldn't go with the Credit Karma. I would use myfico.com. I think it's $25-$30. I found those scores to be as close to parallel as the expensive reports that we pull. Evie, let's open it up to some initial questions. You got any initial questions in the chat you'd like to read?
I don't see any.
I got one.
Evelyn.
I don't see any questions, but I do hear someone saying they want to ask a question.
Go ahead.
Todd, my name's Jared, and I'm an insurance broker. How does, there's a whole gamut of things that go in the insurance score. What have you seen that's prominent in like explaining what goes in an insurance score?
Well, to be honest with you, insurance is not my, you got me a little bit there because it's not my expertise. I don't deal.
My apologies, by the way. I didn't mean to throw you on the spot, but
Yeah, no, that's okay. But again, it's going to be basically the same as what goes into a car or what goes into a mortgage. You have derogatory information, collections, late pays. That shows sometimes, and I'm not trying to be mean here, but it shows an irresponsible person. So if they're irresponsible with their credit, they don't pay their bills, they're probably talking on the phone when they're driving. They probably, they might leave the gas range on when they leave the house. Hopefully not, but they just might not be as responsible as a person that, the credit bureau say, hey, this guy, he's an 850 because he's paying his stuff on time. His balances are low. He's got his whole life in order. Unfortunately, I always say it's like kind of like an FBI profile. It's like a low credit score, which they can be. I'm sure they're good people, but just a lot of times a little not as responsible. So that affects the insurance score, which makes a higher premium usually.
I agree, and I'll just make a comment on this. My team will say it. I say it a lot in our meetings. I'm like, your credit score is who your credit score is who you are, right? It really is. We've seen it so many times over the 20 years, and probably 10,000 credit scores I've pulled. It's funny how many times I'll send people to you, Todd, and you'll get their scores back up, and then we'll go to do a refinance like a year later, and they're like right back to it. It's like, oh my gosh, you paid all this money to get your credit repaired. Now it's just back to where it was. Payments missed. It's a good measure of how responsible people are on their bill pays.
Exactly. And we try to train them as well on, listen, don't get all these department store cards. Have 1 or 2 Visa cards. Get the good ones where you get points or miles or whatever it might be. The problem is, and again, over the 30 years I've seen is, and this was even before the electronic stuff, when they would just mail you the statements. Now you got 10 different credit card statements going. I used to say this on my TV show in the 90s. You got 10 different credit card statements getting sent to you. You're writing 10 checks. There's now 10 times 10 envelopes coming to you, 10 going out. There's a possibility of something getting lost. So have it down to 1 or 2 credit cards. Pay online, set it up also. All the big banks will have a default that as long as it's linked to a checking account and you have money in that account, for some reason, if you miss your minimum payment, it will pull that $50, $20, or whatever it might be. That way you're not going to have a late payment on your report. So we do suggest that to everybody. We also suggest having auto debit. Let Ally Financial, who has your car, pull the money from Chase Bank. I prefer that versus you having Chase Bank send the money to Ally, because if there's a problem, Chase Bank has a glitch or something, Ally is going to say, you know what, you were late. And you'll be like, oh, no, well, Chase Bank, they don't care. But if Ally pulls the money, and as long as the money's in the account and there's a problem, hey, look, my bank statement on that day, I had $5,000 in there. What was the problem? You get out, I call it like a get out of jail card. So you get that laid off. But to be honest with you, with all my cars and stuff that I've done over the years with payments coming right from the finance company to my bank, I've never had a problem. Set it up like that. Don't write checks. It's so much easier.
Guys, just to recap that, because this is super important and something you should write down. Um, Great advice to your home buyers. Have the mortgage company pull what's called an EFT, an electronic funds transfer. That means the mortgage company is going into the bank account and pull the money. Let me tell you why. One of the women Olympic soccer players, I think it would have been like 2 years ago, they were in the Olympics, right? She was set up on automated payment. They were in training for like 6 months, right? We did her pre-approval. She was good. She came back from the Olympics. She had automatic payments set up from her bank account going out. Well, her taxes changed. She was in, where was the last Olympics? China, I think, wherever it was, right? And her taxes went up. And she was 120 days late when she came back from the Olympics. I couldn't get her a mortgage, right? She's all someone you would know very well. She's all over TV. She's super, super famous. Didn't do anything wrong. She had it set. She had the money. Her automatic payments on her online banking was going out instead of them pulling. So anytime you can have the creditor pull from the bank accounts, you're going to avoid situations like that. I've seen it happen several times with professional athletes that we work with. They're in season, they're traveling all the time, they miss it. So that's one thing that Todd just said that I wholeheartedly agree with. The second thing is just keep it simple and advise keeping it simple. I have one business card for all my business expenses. I have a business checking account, right? I have personal credit card. I have a personal checking and savings account. And the simpler you keep it, the better miles you get, the better credit score you have, and the easier it is to manage, right? All the like target cards are it's just not worth managing. It's not worth the risk to your credit score. So I wholeheartedly agree with that. So Todd, I wanted to kind of pull this into real estate and some trends that I see happening. Once again, I think we would be foolish to think 40 million Americans can be unemployed and people aren't going to miss their mortgage payments. When you have missed mortgage payments, I'm not saying this is going to happen right now, guys, but I'm saying within the next year or two, you're going to start to see some short sales. You're going to see some foreclosures come from this. There's just way too many people unemployed and not making enough money to continue to make their mortgage payments. So what is a higher impact on a credit report, Todd? If they have to advise their clients on you either need to go to a foreclosure or short sale, our realtors tuning in want to be able to create them into clients quicker. So I can tell you from a mortgage qualification standpoint, the better thing to do is the short sale. What is it from a credit standpoint?
Well, as you've seen, they're both horrible situations, obviously, that nobody wants to be in. Unfortunately, a credit bureau does not show short sale on the report. It will always say foreclosure. Sometimes it might say settle for less than original amount in the comments, but again, the problem is right when you go into that short sale, it does state foreclosure. So it's not a win-win, unfortunately. But possibly for the mortgage broker, if you show that it was short sale versus a full-blown foreclosure, that might help. What would you say, Chad?
Definitely a short sale, but like this says, if they're delinquent on other accounts, if they're maxed out on other credit limits, they have installment loans, there's other things that can impact their credit score. That's a very common misconception when we pull a credit like, I paid that bill, right? Well, yeah, but you charged up your other credit card by $5,000. So I know you paid that, and you think that one thing put your scores up, but it's all an algorithm. If you change this, and you change something somewhere else, both things factor into the score, right? So credit is never linear. It's always up and down, depending on how much balances you have. So my advice would be try and save it more towards a short sale. So yes. Talk a little bit, we spoke about this yesterday. How long do some of these derogatory things stay on people's credit, Todd? And I loved your advice you gave on my podcast yesterday about the collection payment. So talk about that a little bit too.
Sure. So negative information on the credit report stays on for 7 years. That would be charge-offs, collections, late payments. the things that stand for 10 years will be bankruptcy. So anytime you do a bankruptcy, that's for 10 years. So I get a lot of people say, oh, it's 7 years on my bankruptcy. I'm like, I hate to tell you, but no, it's 10 years. So that's what happens. We were talking a little bit about collections.
10 years. So bankruptcies will stay on your credit for 10 years.
Yep. So the what we were talking about yesterday as far as collections, a couple things. Two things, like if this happened to one of my clients, it was a super rich guy, had a house in Aspen, something happened medically, he had to go to one of these places. They sent the bill to his house in Aspen. He never got the bill. It's for like $200. So he got a call one day from a collection agency saying, hey, you know what, you got this bill. And the guy's like, oh, I don't know anything about it. He goes, we'll take $150 for today. So the guy's like, he's got perfect credit. He's like, well, okay, everybody likes to save $1. So he did it. Now what happened to his credit report was it stated settled for less than original amount. His score dropped 60 points by doing that. That was a big, he didn't know. So that was a problem. I was able to get that off. I worked with the collection agency, so we were to get that deleted. Now, another thing is if he has a collection and it's aged and it says it's going to fall off December 2020 or, in the next 6 months, the problem about paying that sometimes, unless Chad says you got to pay that, the problem is you pay that, it's going to get re-aged. So now all of a sudden it's going to show paid, but you're stuck with another 7 years, which I think is, I don't know why I think that's terrible. They should really correct that situation. So you got to be careful when you look at these credit reports, see when this, when the collection was from, and make sure if it's about to fall off, if you don't have to pay it, then be very careful with it because it will then stand for 7 years.
Just so we drive home that point again, like I've had people come to me, it happens probably once a week. They're like, oh no, I just paid that collection. It will fall off. I'm like, oh no. You just created it on your credit report for another 7 years, right? So that going back to why it's important to get buyers in front of me or your preferred lender as quickly as possible. It's just little things like that. We had a client, they would be home buyers right now. They paid their collection. It's admitting fault. I talked to Todd about it, went through the scenario with him. He's like, yeah, I could have got that off, but they've paid it. They've admitted fault. It's like an admission of guilt on paying a speeding ticket. You're like, yep, it was mine. I'll just pay it. That's really what it's like. And you literally could go 6 years, right? Not pay the collection, pay it on the 6th year. It's then going to show as a paid collection on your credit for 7 years. So you're spanning your credit report 13 years. Am I saying that right, Todd?
That is correct. So you got to be real careful. We always advise people too. They're like, well, should I pay this off? Should I pay it? Like, no. Let us work on it because first off, if I get it removed and you haven't heard from them, we've actually saved you the money. And then right. I don't want you to contact. I get people too. What's this, IC Systems collection? What is this? They don't know. I'm like, don't call them because now you're opening a can of worms. And the problem is they're going to tell you it was for Northwestern Hospital and blah, blah, blah. And you're like, oh, yeah, that's it. Okay, so your curiosity was cured, but now they're also going to say, we want our $2,000. So don't contact them just to find out exactly what it is. And again, let us work on it to try to get it deleted before you start contacting them.
Absolutely. So just some things to know, guys, for when buyers can become buyers again. If you have a Chapter 7 bankruptcy, you are 4 years out on a conventional loan. That changed on December 10th of last year. Chapter 13 bankruptcies are 2 years out. So talk about the difference between Chapter 7, Todd, and Chapter 13.
So Chapter 7 is a full dismissal of all your debt. Now you have to qualify for that. If you have $100,000 worth of debt, but you have $200,000 in cash in the bank, the courts are not going to allow it. They're going to say you have to do, and even if you could possibly even qualify for a Chapter 13, there are tests that they put you through. Chapter 13 is for people that own property or they do have a little bit of money, not enough to pay all their bills, and they're never going to get ahead. That's a court-ordered repayment plan. If you have a trustee that you make the payments to, then he makes the payments to the creditors. So again, if you own a house with some equity in it, and you don't want to get rid of the house, Chapter 13 is usually the way to go. If you don't have any money in the bank and you have no home or whatever, and you got $30, $40, $50,000 worth of debt, Chapter 7, dismiss it, get rid of all this stuff, and start from scratch.
Yeah, so Chapter 7, just wiping it all out. It's a reset. You're going to have to wait longer to be a home buyer, right? Chapter
Right.
13 is a repayment plan to the creditors. And from the mortgage side of things, it's just a little bit more tolerant that someone went through a Chapter 13. As you can see, it's 2 years on a conventional loan. It's 1 year on an FHA loan. Now, these have held through COVID, right? So, guys, these are great listening opportunities and to know the difference between Chapter 7 and Chapter 13, right? Because I'm telling you, someone that has gone through a bankruptcy, they don't think they can buy a home ever again, right? There's some people that like, I went through a bankruptcy. I'm like, when did you go through the bankruptcy? You know, and they're like, 1987. I'm like, it's off your credit by now.
Right.
You're all good, right? Let's take a look at your credit score. So that's just a great opportunity, guys, when you're on the phone and you're prospecting, to listen and to be different and not be transactional, and to hear, no, you can be a year out. Now, the thing on the Chapter 13 from the mortgage perspective is we just want to see that they've reestablished their credit, right? That they're back to paying their bills. And we usually want to see some sort of repayment, right? So if the Chapter 13, that's the year time lapse, right? So if the 13 was released this time last year and they have new credit or their existing credit and they've been paying on it and their payment history is good for the first year, they can get a mortgage again. So literally you could be in a home a year out after going through a Chapter 13 bankruptcy. And I think that's a common misconception. And just knowing that one thing, I promise will grab you a deal or two per year if you listen correctly. Anything else on bankruptcies, Todd, you'd like to share?
Again, you can't go out. And the reason I know this is because I used to office with a bankruptcy attorney, and I have some friends that are BK attorneys as well, so I do know a little bit about this. If you're planning on a bankruptcy, you can't go and take your credit card and go charge $10,000, $15,000, then a month later try to file bankruptcy. They look at all this stuff. You have to fill out forms. They want to see exactly. They're going to look at statements and everything to see if this is like a planned bankruptcy. Let's grab as much money as we can and then file bankruptcy. They're not going to allow it. And I was surprised how many bankruptcies got turned down, and Chapter 7s, that is. And they basically said, you got to do Chapter 13. And then the people are just like, I didn't know that. So, again, if a person, I see Chapter 7 with like medical issues, they got $100,000 worth of bills, or they got laid off and they haven't been working, or they were making $200,000 a year, now they're making $40,000 a year, and they got a ton of debt, stuff like that. Is as long as it's legit, they'll let the bankruptcy go through.
Excellent. And just to hit on a few other loan programs, Chapter 7's 3 years out on USDA, 3 years on Chapter 13. In North Carolina, I have some North Carolina realtors on, Todd. USDA's big. You can put 0% down. So these are super important things to know. I always say the realtors just need a basic understanding of lending. Let me be the expert. But knowing these things and listening for opportunities will help you make more money. VAs, 2 years out on a Chapter 7. They're very forgiving for veterans, and Chapter 13s are a year out, right? And they're very flexible with that Chapter 13. So these are just opportunities, guys, to create buyers that other agents aren't listening for or don't know this information, and to put them under your wing. Talk a little bit about inquiries. This is like, gosh, I can't tell you how many times I have to tell clients, like, dude, chill out. If I pull your credit, it's 2 or 3 points. I promise, me pulling your credit, and an expert that I am in credit scoring, I'll give you back 10 of those points. I can find something in your credit report that me pulling it, I'll add to it, not subtract from it in the long term. So just talk about inquiries, both hard and soft, and how they impact your credit.
Sure. So hard inquiry, again, is if Chad pulls a report, or you go for a credit card, or you go for a car, That will go on. There's three types of inquiries, which we'll discuss in a second. But a hard inquiry does go on your credit report. It does reduce the points by from 2 to 3 points. And what I always tell people as well, especially if they're working on mortgages, if Chad can't do that mortgage, the chances of somebody else doing it are pretty slim. So if you're working with Chad, don't go around to 5 other mortgage brokers and then let them all pull your credit. So you don't want to do that. Again, they will fall off within 2 years. And anything like over 5 or 6 inquiries, we start being concerned about. I see people with 20, 30 inquiries. I've had some people with hundreds, just crazy. So especially before you're going for a mortgage, don't be buying a new car because that's going to throw your numbers off and it's going to drop your credit score too. So just be real careful with who pulls it. Go ahead.
Real quick, just to add in there, super important is mortgage, if they're registered correctly with the 3 credit repositories as a financial institution that does mortgage lending, the inquiry will fall off within 120 days. And that's something I have to constantly tell buyers. Right. Like, dude, it will fall off in, it will fall off in 4 months. It's not forever, and it's 2 to 3 points. It's not 10 to 20 to 30, and that's a very common misconception.
And Chad, tell the viewers too, like, if you pull the report today, and then you have to pull another type of report right before closing, correct?
Yeah, so here's how we handle that. I am of the mindset, and I hope this is okay with my partners on, but just to be transparent how we handle it, if I have a rock solid buyer and they have 800 credit scores and they came to me 3 months ago and I have to update my pre-approval letter every 90 days, I don't re-pull their credit, right? There's no point to, like, they didn't go from 800 to 600. I've just never seen it, right? It's never burnt me in 20 years of doing this and 3,700 loans, right? But if it's tight and they're like a 660 conventional loan, right? I'm going to re-pull that credit, right? And I'm not going to put a letter out there on a borderline deal that says they qualify unless I confirm 100% that they qualify.
Right. Because a lot of people ask me, well, is the mortgage broker going to pull again? And that's exactly what we say. If you're borderline, you got to be careful because yes, they might pull it again. Because if you drop and all of a sudden get to the closing table, you're going to have a problem. So that's good. So soft inquiry, that's made like I am tied in with one of the credit bureaus. We're the only ones in Chicago that have this system. There's probably about 25 of the larger credit repair companies that are tied in. They contacted me about 10 plus years ago. I used to have attorneys that worked for me, so all my documentation was coming from the law firm. At the time, they said we were the 3rd largest law firm doing this type of service. They said, would you like to be dialed in? You can pull credit. If you have problems, talk to us. Like, absolutely. So when I pull it, it's a soft inquiry. So it doesn't show up on the report under inquiries, and it does not do a point reduction. Credit Karma, Chase, any of those type of things, that's a soft inquiry. When you go on to like myfico.com, that's a soft inquiry. There's 2 other types of inquiries when you look at the credit report. So you have the inquiries. Soft inquiries aren't going to show. Promotional inquiries. People are always like, well, I see this. I never replied for Chase or whatever. It's a promotional inquiry. That is, Chase says to TransUnion, says, hey, we want people with credit scores of 650 that live in the Chicago area. That's how they get their information. They get a partial credit report. They get enough information to know that if you qualify or not. If they think you qualify, that's when you get the solicitations in the mail. So, if you're at 850, you're getting all these platinum cards and everything. If you're, low 600s or 500s, you're going to get a lot of these like Capital One, $200 credit limit type offers. And even though you get these like pre-approved things, it always says read the fine print based on, reviewing the credit. The other one is they analyze your credit. So all your creditors, if you look at that, they, once a year or so, Citibank will look at your credit to see what your score is, make sure that your balances aren't out of whack. I have seen people, and I'm sure Chad, you've heard this too. The guy's got a $10,000 limit, but now he's maxed out on all his cards. He's making late payments and everything. Citibank takes his $10,000 limit and lowers it to $2,000. That happens. I see that not all the time, but I've definitely seen that happen. And now the guy is over the limit. He's just it's a mess.
Yeah.
But that will happen.
Absolutely.
Or they might even close you.
Listen, I was transparent. I talked about how much money I have now, but when I was in debt and I was charging a ton on my credit cards, I had 3 or 4 credit cards closed. And that was the most painful part, is when they took the credit line down, and then I was overextended, and the fees that came with that and the added interest, it just crippled me.
The credit cards, it really blows me away. I get it. That's how they make their money, but they put you in such a hole. Now they raise. If you read the fine print, you start making late payments and stuff. They jack your rate up to 20%. It's just crazy. It's like mafia rates. So it's very, very high rates. They don't want to help you. When these people want to they can only make these minimum payments, but at 20+% interest, you're never going to get out of that hole. It's going to take you forever.
I agree, buddy. And we kind of hit on this a little bit earlier, but just to drive this point home, anytime I advise someone to pay a collection, I tell them to get a removal letter from the creditor first that shows if this is paid, it's removed from the credit. So you have to get a letter. Everyone thinks like, I paid the collection, or, hey, I caught up with my late payments. And they think it's the creditor's responsibility to keep their credit clean. It's not. It's ours as consumers to keep our own credit clean, right? It's our responsibility to have clean credit. It's our responsibility to be guarded of it. We put it off on, my credit card company's going to take care of it. Well, sometimes there's data entry people in India making who knows how much an hour, and who knows how old they are, responsible for the data entry of your credit, right? It's your responsibility, your client's responsibilities to make sure it's clean. So what would be some other tips besides getting a removal letter on collection that you could give when you're trying to get something out? Or what are some strategies that you guys use at Nationwide to help clean this up? Because I'm always shocked, like, oh my God, they got that collection off, and then they got that late payment off. Like, what are just some things you guys do behind the scenes?
So first of all, with collections, if you receive a letter, say this is a new collection and it's, again, IC Systems Collection Agency, they send it out. It's not on your report yet. And hopefully if it's a small amount and you're like, yeah, this it's the copay or the deductible on my medical bill, pay that ASAP, because the collection agencies will send out letters first before they report. So if you can nip that in the butt to begin with, save the headache of having to go get it on your credit report. So that's important. A lot of times, though, you will call a collection agency, and unfortunately, especially the big ones for Citibank or American Express, I've had this before. Guy owed $40,000, calls American Express or the collection. We'll pay it, but I want to delete it. They said no. He's like, are you kidding? He's like, no, we can't do it because of policy. So that's the problem. You want to get these things before they get reported. Sometimes I get lucky with the small little, listen, collections agencies are a business. There's a lot of small guys as well that if they collect, they make money. And I've got there's a guy in Northbrook, and I know, and he says, you pay me, I'll delete it. So there are situations where they delete. It's always worth asking, say, hey, will you delete this? I just had somebody the other day, we got on the phone with them. It was on his credit report already. It was close to $3,000 worth of medical bills. The funny thing was, we didn't even have to ask. We were going to be going in there all tough and everything. And the lady says, all right, we'll delete it from your report. We're like, excellent. So they gave us a confirmation letter. They noted it. They're sending stuff out. So, and we checked the report a couple weeks later, and it was off the report. So that was actually funny, because I said to my client, I'm like, we were ready to go to war and all this stuff and blah, 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 because you didn't get the bills. And before we even said anything, and this guy's got money, and he's just like, they took it off. So that was awesome. So don't be afraid to ask.
I agree. And hey, one thing I wanted to ask, Todd, is I've seen just in your performance, it seems like some of the older stuff, if it's been on there 5-6 years, especially collections, especially late payments, those derogatory items, there just seems to be more willingness. Like, it's went long enough, yeah, we'll take it off. Am I off base there?
No, what it is it's not that they're saying, oh, we'll take it out because it's 5 years old. First thing that we do at Nationwide Credit is we'll look at dates. We look at the dates these items were reported to the credit bureau. This collection hasn't been reported since January 2016. It's like me saying, hey, Chad, when we went to lunch in January 2016, I need that receipt. He's going to be like, Todd, I don't have that receipt. That's what we put them through. So, yes,
Right.
The older it is, the better it is for us. When we review clients' reports, potential clients, they got running late payments. Mr. Smith, are you going to be late next month? Yes. You know what? I can't really do much for that. Get that stuff straightened out and then give me a call, because we don't want to take them on knowing in the back of our heads that we can't do anything. Then when I have referral partners like Chad, if they send them to us, we don't want to do it. And then all of a sudden I got all these people that he's working on. They think they're going to get a mortgage and they don't. People appreciate it when we say, you know what, do this, then give us a call. And that works out well. One other thing, though, I do have a little inside trick that for my company, at least, TransUnion will delete any medical collection for me, $500 or less, paid or unpaid. I literally do it within, literally I press a button and all of a sudden it pops up like 10 seconds later, go repull the report, it's gone. So I've had situations where the TransUnion report we need to bump up, that's the middle score, and they got a bunch of medical collections. We do it, we zap these medicals, I'll say, Chad, repull the report, and the score has gone up. So that's something to think about in the back of your mind. I know that a lot of the realtors aren't pulling credit, but if the client says that, hey, I got a lot of medical collections, let Chad look at it. He'll let me see it, and then we can make that determination if that is the magic pill. But I've saved people, points and stuff. I
got to tell you this. We've said it in team meetings before. The things you get off TransUnion, I've said it a couple times. My team member has said a couple times. They're like, Todd Stern has naked photos of someone at TransUnion because he has a ton of clout with them. He gets anything off we need him to. So it's just a fun add-on.
Yeah, they're super nice. I really enjoy working with them. Their office is maybe 4 miles from mine. We were the second person with the system that they went out with to the big credit repair companies because they wanted us to be kind of like a guinea pig, as we would say. I was at their office and stuff. They were great people. And they said, listen, you're doing it. I even said to the guy once, I said, I'm shocked that I'm sitting in your office. He said, Todd, he goes, what? You're doing everything right. You're licensed. You're legit, everything. He goes, we're going to work with you. Why fight? And I said, fine with me.
Yeah. You do a great job. And I can't tell you how much I appreciate your service for our clients. I'm going to end on this, and then I want to leave the last 10 minutes for any questions, comments, just situations that our realtors have encountered of late that maybe we can help them out with. Loan quality initiatives. They're introduced in 2010. It's now being pulled prior to closing, right? So these are back. They were in 2010. They've come back full force because of COVID. Right? So they are watching, guys, very closely any credit inquiry, any new account, anything that gets changed throughout the process. Like, I'll tell you, I had a deal earlier this month. It almost blew up 3 deals. It's the first deal we've been late on closing all year, right? The guy opened a new auto lease throughout the process, right? No one knew about it. He didn't say anything. He kind of hid from it. He knew he did something wrong when I talked to him, but it was pulled up on our LQI report as we're in for a final approval clear to close, like a week before the closing. It uncovered that he opened this new auto lease. Then it was in the business, right? I was hiding the business from the qualification because it kicked the qualification out. So this one little thing uncovered this whole mess. Thankfully, I'm one of the top producers at Summit. I got some exceptions. I had to get like 15 people involved. We had to contact Fannie Mae. My girl, Rachel Freeman, who's the best loan partner, I would put her up against anyone in the country, worked super hard, and we fixed it, right? But it just created this unneeded situation. So no, these LQI reports are They used to get pulled on 1 in about 10 loans. They're getting pulled on every loan right now, right? And Fannie Mae and Freddie Mac is looking for any reason not to buy a loan, and that will continue to get worse as foreclosures pop up, as short sales pop up, and our PMI premiums will go up if those things happen. So guys, just know that it's super important to consult your client. Let them know to put their whole financial life on pause when they're going through a mortgage and when they're out looking for a home. So we have some questions. I want to make sure we get to them. Let's bring anyone on that wants to pop on. You can just pop up your camera. And if you got questions for me or Todd, just go ahead.
I had one in reference to pulling credit, because you hear that often, many times saying, well, like, I was working with this other company, or I was working there. I don't want to pull my credit because I don't want to get dinged. Now, I know you said it only gets dinged 2 or 3 points, and you say you can pull it 5 or 6 times, and I'm not too sure if you touched base on it. But my question would be is, I didn't get to these buyers until, good old Zillow and whoever else. And by the time I got them, they pulled their credit, I guess, about 30 days ago. How many days, what's the time period that they have that credit can be pulled so it doesn't hurt them or whatever it might be? Like, can you pull it 5 or 6 times, like within 60 days, 30 days, 90 days? Like, what's the time period?
Todd, I'll let you take that one.
Well, as far you can obviously you can pull as much as you want. What it affects is though, like, now Chad might be a little bit better on this, but Chad, if you pull the report within a certain period, it does not affect the score. But I'm not sure if ABC Mortgage pulls it and then 30 days later Chad pulls it. I think there's going to be a reduction.
Yeah, so
like a 2 or 3 point reduction, or like, because they're claiming that they were told that they're gonna get 50-point reduction.
No.
Unfortunately, there's unscrupulous loan officers in our industry that use that as a scare tactic to keep people in the lane and have them not check with under lenders. It's 2 to 3 points, and I can't tell you how many times that I've pulled credit after another mortgage lender and it was unaffected because we were both registered as financial institutions and mortgage lenders, right? So I've seen that as long as the credit pulls are within 90 days, it's a 3-point hit, and that can be up to, I think it's 4. Don't quote me on this, but it's 4 to 5 lenders can pull it. Now, if one of them, a lot of brokerages aren't registered that way, then it's going to be a 2 to 3 point hit.
Okay, but that answers the question, because I agree 100%. From abundance to scarcity, and most of them are scarcity, so they put up that like, oh, don't go anywhere else because if you do, you're gonna get dinged. I mean, she's like, yeah, this mortgage company said I'll get dinged 60 points. And I was like, damn, 60 points. I'm like, I don't know, I gotta check with my guy to figure that out first.
Yeah, that's scary.
And I've had people like point their finger at me and blame me that like, you pulled my credits down 80 points. I was like, it's like, no, it was the 3 payments you missed, not my credit point.
Right.
So one thing too I wanted to add on, just some mortgage credit scoring changes. FHA and VA, when you have a 580 credit score, that's as low as we go down to. That's currently requiring a 10% down payment. You need a 620 credit score to have 3.5% down and 0% down. Okay, we're seeing conventional credit scores. This depends on down payment, but those are still going as low as 620. I would say just a good rule of thumb, because it varies so much on down payment and property type, but a 660 to 680 credit score is preferred for a conventional loan. And guys, usually when a 680 conventional loan credit score, it's under that. Like if you do a conventional loan under 680, there are what are called loan level pricing adjusters, and it hammers their interest rates. And I find FHA to be a better option for a lot of those buyers. So just a good rule of thumb to tell people is you can get us a loan with 580 if you have 10% down, but 620 is where you really want to be on those government loans, so a minimum score of 620. And that does vary between lenders. Like, guys, I always tell people, most of us have all the same stuff. People get wowed by like, oh, this company has this. They're just putting some marketing spin on it. We almost all have the same stuff, right? But right now, during this environment, it is different from lender to lender. And it's super important on your government loans to work with a lender that is a seller servicer of Fannie Mae, Freddie Mac, and Ginnie Mae, which sells to FHA and VA. They securitize those loans. Summit Funding is a seller servicer for all three of those entities. So that's super, super important right now. So just a good
That's
rule of thumb.
660 to 680.
Yeah,
That's
I
660
would
to
say just
680. 5% down.
very good rule of thumb is a 620 credit score, right, can get you a good good government loan, right? A 680 can get you a good conventional loan. That goes down to 660. Like, Brock, I talked to one of your clients last night. They're a touch under 680. It hits their credit score a lot, but their loan's too big to do a government loan, right?
Right.
And then anything above 680, typically you're going to go with a conventional loan.
And what's the percentage down on those? Is that 5% for those?
Conventional loans for first-time home buyers is 3% down minimum, and you need a 680 to get a good credit score on that. They will go down to 660. Cool. So just some good credit score updates to know. And guys, don't expect those credit scores to constrict over the next 6 months. Like, if COVID continues to happen and we continue to see a fall in jobs and an increase in unemployment, these things are just going to constrict tighter. Any other questions for Todd on credit scoring?
Just pay your bills on time. That's what I tell you. Don't make late payments. Keep your balances low.
I wanted to know, what should we advise clients to do quickly to raise their credit score?
Again, we go over the report. Just what I was saying now. Look at the balances. Number one, their balances are above 30% of the credit limit. If it's $1,000 credit limit, they owe $700. They need to bring that below $300. And again, that's going to take 30 to 60 days to hit the credit bureaus. Now, if it's crunch time and you're trying to do this mortgage, you can give, correct me if I'm wrong, Chad, because every bank is different, but rapid rescoring. You do that, right?
We do. Yep. Yeah. It's very expensive.
Yes.
We do
only
do
if
it.
Desperately need it.
Yeah, but they're going to pay for it.
Right.
I've seen rapid rescores cost $500-600. So that's a quick service with TransUnion, Experian, and Equifax to force them to change the credit report because there's been some sort of radical change, right? Like a whole loan was paid off, or there was a late payment that shouldn't show there, and we have a letter, right? So those things are available. It's just better to prepare the client 3 months to 6 months before they buy, when possible. I know that's not always possible for you guys. I know some people call you and say, hey, I want to buy this house. Go show it to me. And it's not like you're not going to write them the contract. I totally understand that, right? But just the quicker you can get in front of people, the quicker you can get them to us, is just going to optimize their buying window, right? So I will end on this. Todd, do you work in any other states besides Chicago and Illinois?
Yes. We basically work in all states except Georgia.
Okay, cool. So if you're not in Georgia, if you got credit repair, send it to Todd. He's the best. I've used many. It took me forever to find someone as good as Todd. Someone that has structure, someone that has technology and systems to update, someone that's as responsive, someone that cares about his business. I would say our industry gets a bad rap from like used car salesmen. That happens a lot with credit repair specialists. Yeah. A lot of them do nothing and they charge way more than Todd. He has just been a wonderful partner for me over the years. He's helped me create so many buyers. Todd, what's the best way for our listeners to get a hold of you?
Sure. Well, there's a couple ways. Obviously, the internet, mynationwidecredit.com, or just even Google Credit Repair Chicago. We usually come up number one. My direct number here is 773-862-7777 or Todd@mynationwidecredit.com, and we'll get
Cool.
that
And
information to you.
how about a website that they could check you out on?
As far as Google.
Yeah.
You're talking about my personal website, or?
Yep.
Well, that would be mynationwidecredit.com. Is
Cool.
my website.
mynationwidecredit.com. And we'll just end on this question so we make sure you guys get it, all your questions answered. The best way to establish credit for someone who doesn't know where to start so they don't get in debt would be paying off my credit card in whole, be better for my credit score. So yes, pay that balance down to zero, but don't make the mistake of closing the account.
Yep,
right?
don't close
So Todd said at the beginning, account history and not credit card surfing is super, super, super important.
You know, one thing too, if you have old credit cards, you have a Macy's card that you've had since 96, but you don't use it. What I always tell people on stuff like that is that's got a lot of history on it. Go and buy a pair of socks. Do something. You got to stimulate that, because if you don't use that card, or even a Visa, MasterCard, they will shut it down. And all of a sudden, the score drops because you don't have that credit card. Or people are like, well, I'm paying that car loan off next month. And then, well, unfortunately, it is what it is, but the score drops too, because now you took an open, good trade line and you got rid of it. So don't be closing credit cards, especially the old ones. And again, if they're old and you haven't used them, use them once or twice. Stimulate them a little bit so they won't shut them off.
Todd, you're amazing. I really appreciate your partnership, guys. Thank you so much for tuning in.
Thank you.
And it's always an honor to get to help you generate a few more leads and make a little bit more money for the rest of the year. Thanks for tuning in.
Thanks a lot, guys.